this is going to be the final crisis, which is, again, a U.S. dollar and a sovereign debt crisis, where it's not just the mortgage market that's in trouble, it's U.S. treasuries where, you have a crisis. Imagine how much faster the price of gold is going to go up when the central bankers have to compete with private investors who are right now not even in the market, or when the Western central banks, because the U.S. hasn't bought any gold, right? They're not buying gold in the U.K. or Germany or France. It's the East that's buying the gold. It's the emerging markets. Look, Poland. Poland now has more gold than the United Kingdom, right? So what happens when the West wakes up to what the East is doing and realizes that they need more gold? The problem is, regardless of who wins, right, the problems are going to get worse. The budget deficits are going to get bigger. The trade deficits are going to get bigger. And we're going to have a crisis. We've been kicking the can down the road since Greenspan. But eventually we're going to run out of road here, and we're going to see a dollar and sovereign debt crisis. And I think that's what the gold market is telling you. Gold prices are rising like this as a warning sign. It's unfortunate that it's being ignored, but I think it's a harbinger of a much worse crisis than what we had in 2008 or what we went through with COVID. This is going to be the final crisis, which is, again, a U.S. dollar and a sovereign debt crisis, where it's not just the mortgage market that's in trouble, it's U.S. treasuries where, you have a crisis. Silver's, $33, $34 an ounce. It's still well below its highs from 2011 and even 1980. Silver got to $50 in 1980. Silver is very cheap. I think investors are ignoring it. I mean, most investors are ignoring gold. The reason that gold is almost $2,800 is because central banks are buying it.
Yep.
Most Americans are selling gold if they even had gold to start with. And the media doesn't even cover what's happening in gold. But eventually they will. I don't know how much higher the price is going to have to be. I recently dug up a clip. I posted it on X when I was on CNBC in 2004 or so. And I'm talking with Mark Haynes, who unfortunately passed away years ago. But I'm talking about gold, and it's like $490 an ounce. And I mentioned, gold's $60 an ounce higher than it was when I was last in your studio about 6 months ago. And his response was, who cares about the price of gold? Why should I care about the price of gold? It's, and now it's, almost $2,800, and they still don't care about the price of gold. But for one reason, they care about the price of Bitcoin, which is irrelevant, but they spend all their time covering Bitcoin and no time covering gold. Well, I think the smart money is, there's just not much smart money around. I mean, my money's there. I think I'm smart, but I mean, there are some people too, that are in gold, and you'll hear them. I was listening to an interview with Ray Dalio today, and of course he's got a lot of gold, and a lot of other people that seem to understand the fundamentals of the problem also own gold. But we're a small minority when you look at the overall, investing community. But I guess they don't understand. They have a lot of confidence in the Fed and other central bankers. They don't even really understand inflation or what it is. They don't know much about money. And they mainly just follow trends or momentum. So they're too fixated on the themes in the NASDAQ and AI or whatever is just going up to even pay attention to gold. And they think that people who are buying it are just gloom and doomers, and that it's irrelevant. But they're going to be surprised, just like they were surprised by the 2008 financial crisis, which was something that they should have seen coming from a mile away. It was obvious that it was coming. I warned about it for years, and again, those warnings fell on deaf ears. And then when the crisis hit, everybody acted like it was impossible to see it coming. And the next crisis again is going to be worse, and gold sees it coming. I mean, not the price is where it is, but I think you're going to see a much bigger rise in the future. It's going to include silver, and it's going to include the gold and silver mining stocks, which I just was looking today. The combined market cap of all the gold mining stocks in the world is only about $400 billion. There are plenty of individual stocks that have a market cap of more than $400 billion. I looked at the MicroStrategy, which basically produces nothing, and it just leverages Bitcoin. It has a bigger market cap than all the mining stocks in the world, except for Newmont. And Newmont is barely ahead of it. It was like as of yesterday, it was about 5% greater market cap for Newmont mining than for MicroStrategy. When people want to blame oil for inflation, they don't realize that we're actually getting a break on oil. Oil is historically cheap. If you price oil in gold, how many barrels of oil can you buy with just 1 ounce of gold? Oil has never been this cheap. I mean, the only time it was early COVID, when oil collapsed, in the beginning of the shutdown of the economy. But if you throw out that month or so, under a normal circumstance, we've never had oil as cheap as it is right now. Even 50 years ago, 100, whatever, it was never this cheap. So we're getting a huge break. But that also tells you that oil is not going to stay at this price. Gold being at 2,800 tells you that oil's not going to stay below $100 a barrel, and we're still below 70. It's not going to stay below 70 or even below 100 for long. Oil is a leading indicator gold is a leading indicator of where the price of oil is headed. But in the meantime, it's great for the gold mining companies that need a lot of oil to mine gold. So, but this should be helping these stocks, but nobody seems to care. But I think there's an explosive opportunity here where people are paying attention to the NASDAQ. They're forgetting about what's going on in gold. They made the same mistake, in 1999, 2000, when everyone was buying .com stocks and gold was under $300. And the gold mining stocks were ridiculously cheap. And then the bubble burst and, gold went from 300 to 1900. And you got a lot of 10x moves in the gold mining stocks. I think this is going to be an even bigger move. I think we'll make more than 10 times our money in gold stocks, maybe a lot more than 10 times our money. And right now, we're on track. 2024. We're on track for the biggest gain in gold since 1979. That's how rare a move this big is in 1 year, and nobody is covering it. But the big difference is 1979, that was kind of the end of the move, right? Gold peaked in 1980, and it went from $35 an ounce to $850. And there were gold stocks that went up 50x, during the 70s. Maybe some, there weren't even that many around. But this, I think, is early on. We just started this bull market. This is the first year, because we had the first leg, right? We had a bull market from 2001 to 2011, right? That's when gold went from 270 to 1900. That was a big bull market. Then we entered into a bear market, consolidation, where gold went from 1900 down to 1000, and then back up to 1600, traded sideways, got back up to 2000, back down. But really, from 2011 through the end of 2023, early 2024, gold went sideways. But what it did was form a huge base, and the resistance was around 2000. And we didn't really break out of that until this year. So we just basically left the launch pad, and now we're at, almost 2,800. But I think this move is going to be at a minimum proportionate to the move that preceded it. So gold went up about sixfold to go from 300 to 1,900, right?
Right.
And so this move should be at least sixfold, which is 2,000 to 12,000. So kind of at a minimum, you think gold is going to go to 12,000, but I don't know why it would stop there. I think it's going a lot higher than that. And again, it's not that gold's going anywhere. They're going to print a ton of dollars. We've got massive deficits in the United States. We're running about $1 trillion, every 4 or 5 months of debt. So we're adding like 3 to 4 trillion a year to the national debt. interest is now $1.1 trillion a year. It's the second biggest line item in the budget behind Social Security. Probably by the end of next year, we'll be paying more in interest on the debt than we're paying in Social Security. And where's all the money going to come from to pay that interest, as well as fund the operating deficits? They're just going to print it. And so the dollar is going to get killed, and the price of everything is going to go up. If you thought we had bad inflation last year, wait till you see what's coming. And it doesn't even matter who wins the White House. Inflation's going much, much higher, and the gold market is eventually going to figure this out, and then gold's going to even outpace inflation because people are going to be looking for an inflation hedge. They're going to see this freight train coming, and they're going to try to get out of the way, and they're going to try to protect their purchasing power, and they'll do that by buying gold. When this century started in 2001, the Dow was around 10,000, well, maybe 10,400, but just above 10,000. Gold was just around 300. And gold has gone up more than 8 times, whereas the Dow has only gone up a little over 4 times. So what is that telling you? That's telling you that the Dow didn't even go up. The Dow has lost about 50% of its value over the last 24 years. Yeah, they just concluded that BRICS summit in Russia, and they didn't announce any kind of deal to form a new currency. But what they did make clear is that they're moving away from the dollar to the extent that they can. So they're going to try to trade with one another bilaterally in their own currency. So if Russia wants to buy something from India, the invoice will be in rubles or in rupee. It won't be in US dollars. That's what they're going to try to move away from, is using the dollar to trade, among themselves. And also they're going to be holding fewer dollars than they have. And so they're going to allow their dollar reserves to go down. And that's why, you're seeing what's happening with gold, because that's what they're doing. They are slowly replacing their dollar reserves with gold reserves. And that trend is going to continue. It's just getting started. And, that's the main reason that the price of gold, I think, is rising, but you're not seeing, silver rising, because they're not buying silver. They're just that they don't have the capacity to store that. So they're just buying gold, and they're not buying gold mining stocks either. They're just buying the actual gold. And while investors who would be buying those other metals are still clueless about what's happening. But imagine how much faster the price of gold is going to go up when the central bankers have to compete with private investors who are right now not even in the market, or when the Western central banks, because the U.S. hasn't bought any gold, right? They're not buying gold in the U.K. or Germany or France. It's the East that's buying the gold. It's the emerging markets. Look, Poland now has more gold than the United Kingdom, right? So what happens when the West wakes up to what the East is doing and realizes that they need more gold?
Why haven't we been buying gold? Why hasn't the West been buying gold?
They're not.
Yeah, but why haven't they? What's the rationale?
I don't know. I mean, the America doesn't want to buy gold because it wants people using the dollar. But look at all these sovereign wealth funds that are loading up, in Switzerland or Norway. They're loading up on tech stocks. They own MicroStrategy too. They should be buying gold mining stocks or physical gold. Eventually they're going to do that, but they haven't been doing it.